Hello, everyone. Hello. This is Charlie Tian again. I'm very glad to see you. Thank you very much for joining me today at this time. It's December. I've been doing this monthly members engagement meeting once a month, always on the same time, 1 p.m. the first Wednesday of each month. And I hope to see you every time, all the time. And please let me know where you are. I will very glad to see where you are. And of course, I am in Texas, in Plano, Texas. And I would like to know where you are. Yeah, please type in the area if you can let me know. That'd be great. Yeah, thank you very much. Hey, and Ergang and Eric, Julia, and yeah, let me know where you are. London. Okay, very glad to see all of you, and so some certainly regular attendees, and very happy to see you. And again, we know that the market hasn't been doing very well lately. But overall, this year, market is down about broad market is down about 15%. It's not too bad. And if you want to check out the valuation of the market, you can always go to our Buffett indicator page. Let me share my screen with you here. And give me a little bit of time. Okay, let me share my screen here. Yeah, you should be able to see my screen here. And you can see that you can always check out the market valuation in the Buffett indicator page, which is under here, under the market tab here. The very first one is Buffett indicator. You can always check. And according to Buffett indicator, the market is still significantly overvalued. And of course, you can read about the details here. And the next thing you can check is a Shiller PE. You can check out Shiller PE here, which is still 10% higher than the 20-year average. And the potential return is actually not that high from when it's overvalued. The implied future return is 4.6%, which is much better than last year, the same time last year, but it's still not that high. Okay, now I want to go to the page we just released and we worked on, and we just released. It's the ETF page. We started a ETF page, and we are a stock research website. We provide this so that you can check it out at least when you need it. For instance, a very popular SP 500 index ETF is here. Just tapping the ticker, and we will show you the performance. We will show you the stock, the trades, quarterly trades the ETF has done, and the holdings in the ETF. In the case of SP 500, basically SPY is SP 500 companies, and the structure of this is similar to the Guru holding page. Okay, click here, you can see the largest holding from the top to bottom. Largest holding, of course, Apple, Microsoft, Amazon, Tesla, those giant companies, because SP 500 is a market cap weighted index. So you can see that you can see different weightings, and you can see the stock trades from the during quarterly for the ETF. And more importantly, you can see the performance. I think usually when you invest in ETF, you're probably more interested in the performance. The chart is similar to what we have with stocks. You can add other ETFs and stocks here to compare. So this is the SP 500 index. if we look at the year-to-date performance. Okay, this is SPY, this is SP 500. So SPY is actually slightly lower than the SP 500. There are probably some index, the dividend adjustment there. And you can always turn on, actually add other index here to compare, to remove that. Yeah, the ETF to me it's it's relatively simple product. Let's take a look at another popular ETF, ARK. We all know that Casey Wood was very popular 2 years ago. Even last year, she was extremely hot on Wall Street. And now we can look at her performance here. And over the last year, the past 52 weeks, her fund was down 66%. And it's only about 6% above high. The SP 500 was down 14.6%. And during the same period, the fund was down 66%. And you can also look at the year-to-date performance. You can add another ETF here to compare. So you can add a stock here to compare. For instance, I want to add Amazon here to compare. You can add a stock here to compare. Instead of investing in ETF, you can always invest in individual stocks, which is what we are expertise at. And look, when you add a stock, here all the performance numbers are listed. You can compare different investment vehicles. There 1 week over performance over different periods, and also the total returns, the yearly total returns. You can see that this year ARK is down 63%. It has been unfortunate for those who buy the ETF, actually the ARK at a peak. Actually, I know lots of people personally who bought ARK right at the peak here, and they're still buying. I don't want to comment the outcomes, but so far it has been very poorly. It's very hard to go back. If you lose 66%, and you lost 2/3, and you need to triple your investment just to get back. Okay. Yeah, and whenever you have questions, as always, whenever you have questions, please feel free to type in the conversation area, and I will certainly respond to your questions as best as I can do. And I see some comments there. Eric's asking, is US overvalued or also other countries? US, according to Buffett indicator, is overvalued. But Rick is saying SPY, which is SP 500, fairly valued. He's saying relative to 12-year average. Let's take a look. We look at the SP 500 PE, P ratio. We have the Shiller PE. I think Rick is talking about the regular PE. We should have the regular PE here. The regular PE ratio is of SP 500, which is here, which is at about 20.8. The last the peak actually about 2 years ago, the valuation peak was, the P ratio was about 40. I think this is monthly data, so at one time it was above 40, and now it's about half of the peak. The P ratio is much lower. Of course, there are two reasons. One is the market was down, and second is that the earnings increased, and the December 2020 P ratio was definitely affected by the pandemic over that year. Okay, so that's why this peak is higher, probably is higher than normal. This also tells us actually the regular PE is not a very good valuation indicator. if we want to use to look at the long-term valuation, because the earnings, the P ratio can be affected by the earnings over the year. When recession comes, the earning always become lower. If you look at this one, in 2008, the market was down 50%, but the P ratio increased to 120. The reason is because the earning was down even more. So that's why. That's why. Sydney, can you block that? Yeah, that's unbelievable. Every time someone will come and spam. Okay, so this tells us P ratio is not a very good indicator, actually. That's why we look at the Shiller P ratio, which is 10-year averaged after adjusted for inflation. It's averaged, and it gives us a better picture. The P ratio dropped from 36 to about 28 now. So it didn't drop that much. It didn't drop 50%. It dropped. It dropped dropped about 1/3. I would say close to 1/3. Okay, and let me look at other questions. So, okay, Julia is asking me to do an introduction on who I am. Thank you very much. So you must be a new user. I'm very glad to seeing you. Very glad to see you here. My name is Charlie Tian. I'm the founder and the CEO of GuruFocus. You can always learn more about me. Actually, we have here. I have a founder's message here, and please welcome to read about it, and also read my book, Invest Like a Guru. It's available on Amazon, also in different languages, and I think it's a pretty good book, pretty well written, and I hope it will be helpful to you. Okay, let me look at the questions. Can GuruFocus add a free cash flow of business after stock-based compensation? That's a good question. Can you open a support ticket? I cannot record this here. And if you can open a support ticket, actually, it's under support. Open a support ticket here, create a ticket, and we will be able to follow up on that. And also, when we make progress, we'll respond there and we'll let you know. And it's actually a better way. And also for everyone else here, if you want to contact us, you can always, we have the chat support during business hours. And also you can create a ticket. Certainly you can also call us during business hours, but other ways are actually works very well. And if you are a new member, you can always schedule a one-on-one meeting with us, and James will answer any questions you have. And you can select a time that works for you and convenient to you. So then we can talk to you and answer any questions there. Okay, Sylvia is asking, is there a good screen for ETFs, but by size and country, industry? No, that's a good suggestion. I think we thought about that. It's a good suggestion. We can certainly discuss that, and to check if we are able to do it. The data will support that. And also, please open a support ticket here for that, and we can look into it. Okay, let's let me continue with the ETF page. And ETF overall, it's relatively simple. You care about the performance. There might be different sector industry ETFs, and you want, sometimes you're interested in their holdings. They're usually diversified, not always, but you need to know how and where they invest, and look at the long-term performance as well. That's what we provide, the long-term performance here. When I talk about the long-term performance, you want to look at least one business cycle, one market cycle. Okay, you have created a ticket for the free cash flow after stock-based compensation. But if I think a little bit about that, stock-based compensation, it does not affect the free cash flow. Stock-based compensation, when you issue stocks, there's no cash involved. I would invest. I will think more about that if I'm wrong, and I will welcome you to explain more about your request. Because when we talk about free cash flow, it's operating cash flows plus the depreciation, subtract the capital expenditures, and okay, stock-based compensation. Okay, I understand now. It affects operating cash flow, and it needs to be added back. I think we do, but I'm not sure. Okay. Okay, let's discuss that later. I will have a. Please open a ticket. We can have some personal discussions about it. Okay, I'm not sure. Eric's asking GuruFocus value for ETF. No, we don't provide that. Okay, WK, I will take a note about this ticket, and we'll discuss that in the ticket so that I can understand more about it. We don't provide a value like a fair value to ETFs, but we do provide a fair value for stocks. We just okay, that's actually a new feature we actually released. We actually improved the DCF calculator. And if you come to this page, you can see that we added a chart here, an arc chart here. If you take a look, it's actually very straightforward. In the case of Microsoft, it would tell you the DCF model. DCF model fair value 157. The stock price is here, 244, which is obviously overvalued. But of course, you can always change the parameters here. And now, by default, it's a free cash flow, but you can change it to earning-based model. If earning-based model, you can see that the stock price is actually slightly undervalued, even for Microsoft. The different model, the DCF model is actually very, very sensitive to parameters, like the year of growth, the growth rate, the year of growth. If you think Microsoft has a higher moat, wide moat, maybe you can give it a longer growth rate, growth stage period, and you can adjust all these parameters to see that this chart changes. If you want to know how DCF works, we have explanation here. Explains exactly how DCF model works. And DCF model does have its limitation. And DCF model only works well when the company is more predictable. That's why we have a predictability rank here to tell you which company, if the company is predictable or not. When it's predictable, it's possible to use DCF. It's more accurate to use the DCF. When it's not that predictable, the DCF will not give you a very good picture. And the DCF model will not necessarily be accurate. For instance, in the case of Tesla, we tell you that the DCF model fair value is $40, and the stock price is 173, but it tells you it's very much overvalued. But the company has a predictability of one star, means it's almost not predictable. So this picture is not accurate. This valuation will not be accurate in the case of DCF. And also, if I go back to Microsoft, we also have the reverse DCF model. With reverse DCF model tells you the current growth rate of the company, for the price, is the stock price justified if the with the growth rate the company has? In the case of Microsoft, the company, okay, the stock price is actually requires the earning per share growth rate is 13%, about 13.02%. But the last 10 years, the growth rate has been higher than that. So most likely, the stock price is justified in this case. And we also, of course, provide lots of ways of valuation. It's under the summary here, summary page here. Okay, well, the page here, you see is different from actually, you see here on my screen is different from what you have here. Because I'm here, I do some introduction here. We are adding a new feature, which is called segment data. And you can see it here, but it's not released yet to the users. But I can see it. You cannot see it in your account yet, but it will be released soon in 1 to 2 weeks. But I think it's useful, very useful data. And because we are here, I will share with you some of what we are doing. Can see that in the case of Microsoft, this tells you the segment data, the different segments, the contributions to the revenue, and then out of the revenue, how much is gross profit, how much is the cost of goods sold, then out of this gross profit, how much is operating income, how much is expense, and out of the expense, there's R&D and SG&A. Out of the operating income, there's other factors, and then we got pre-tax income, and also finally we got net income. That's a flow chart for the Microsoft revenues, and we are working on this, and we're still trying to make it better, and we will release this in next week or so. It will be for premium members. So this is a current shot of the revenue source. Then we have the historical breakup of the breakdown. I will say breakdown of the revenue by geography. You can see in the case of Microsoft, most of it from international, from US, and about half US, half international. And that's a current pie chart, revenue pie chart. Then there's a segment breakdowns. Segment breakdowns for Microsoft. We have intelligent cloud and productivity and business process, which is in green color, and personal computing in yellow color. You can see that the cloud is growing the fastest. We actually will add a year-over-year tab here. We will add a year-over-year tab here so that you can see the growth rate for each segment. This is the current pie chart for the revenue, Microsoft revenue. Yeah, thank you for all the comment. I'm glad that you like it, but we're still working on this, so it's not released yet. Give us a little bit more time. And okay, this is Tesla. In the case of Tesla, you can see that Tesla, okay, the automotive is 51 billion. This is annual data. And energy is storage is here. And then the gross profit, most of the costs sold. Of course, you're making cars. You have lots of costs there, materials, parts, and then gross profit. Out of that, the SG and R&D, and that's a net income, the income portion. And then geographically, can see that US is still the major contribution, and China is actually the second largest market for US for the Tesla. The rest is others in green color. In the case of Tesla, you can see that's a pie chart for Tesla. US is 44.5%, and China is 25.7%, which is still very major and also significant, and others is about 30%. Then we can see the automotive is still the most of the revenue for Tesla, and also energy generation, that's a solar portion of the business that Tesla bought. I think the company was called First Solar. He bought, Elon Musk bought, he was a chairman for that company. It went almost bankrupt. Eventually, Elon Musk bought the whole company and merged with Tesla. But Tesla's main business is still car business, of course. You can see the pie chart here. And this works for different industries, where here I'm showing you manufacturing companies. And let me show you Berkshire Hathaway. I think all of you must be interested. In the case of Berkshire Hathaway, this actually also shows you why we haven't released it, because you can see there are lots of overlaps of letters here in this case, and here is kind of crowded. But we're working on it, where we will fix this gradually. Some overlap letter and charts here, the text and charts here. So we're still working on it, but you can consider in case of Berkshire, the insurance is the largest business. Then we have the Berkshire Hathaway, Energy, Burlington, Northern, Santa Fe. We have manufacturing, McLean Company, and service and retail. Yeah, the breakdowns for the previous years, this is for the last fiscal year. It's not even TTM, it's for the last fiscal year. For TTM, there are some problems because these are reported annually. For TTM data, we will need to calculate quarterly data, and lots of times the quarterly data is not available. So it's for the annual data. The historical breakdown is certainly here. It's in this chart. It's not in the flow chart, but maybe we can add a year here for you to a drop down here for you to choose which year you want to see. I think we can do that, but this will be in fiscal year, and it will not be in TTM, because the quarterly data is a lot of time are not available. For banks, it looks okay. For banks, we can see that different Wells Fargo here, consumer banking, commercial banking, corporate and investment, wealth management. And then there's net interest income and non-interest income. We know that the banking, for different sector, different part of banking, the risk is different, and so that's why you want to know that which company is more commercial banking, which is more consumer banking, which makes money from fees or from net interest income. Of course, when the interest rate changes, these two portions, the ratio of these two portions will change. That's for banks. And yeah, I think it's good looking tool. We're still improving it. Can download it. You will be able to download it. You will be able to share it. I'll show you another industry, which is insurance. In the case of Progressive Insurance, you can see that Progressive mostly is personal lines, and commercial lines. Okay, then net interest income, investment income, and fees and others. And here there are some design problems. We are still working on it. Okay, different segment breakdowns. Okay, geographic breakdowns. So we're very excited. Actually, I'm very excited by this new feature, and I think it will make your research deeper and give you a better understanding of the business, and so that you overall you will reduce the investment risk will be reduced. That's actually our goal, to make less mistakes and to make fewer mistakes for your research. Yeah. And okay, you're asking if it can be breakdowns for FCF. I think data might be available for income statement, for net income portion, which portion is contributing more to net income. But for FCF, I'm not sure. I don't think, because in that case you will need to break down the capital spending portion, which section is doing, which segment is spending how much. I don't think that's available, but I think for net income, it can be available for lots of companies. For instance, for Amazon, we know that Amazon, although it's a retailer, it's mostly a retailer, but if you online retails, but if you look at Amazon, actually the revenue source is very different these days, very diversified. The online stores is, of course, the largest part. We all know about the AWS and others, and third-party sales. But if you think of the income portion, the profit portion, it's mostly from Amazon, AWS service. It's not from the online stores. So that it's meaningful to separate those in this portion too, in the net income portion too, actually operating income portion too. But we will look into it. We will look into the net income portion of the segment contribution, the segment contribution to the net income contributions. And yeah, I'm really excited about this. Okay, actually, this portion is interesting too. The segment data, the geographical data. Consider that US is the largest section, and then the second one is Germany, then UK, then Japan, then the rest of the world. Here, of course, there's no China contribution because Amazon is operating in China, but it just Chinese market is very competitive. There are local companies like Alibaba, Alibaba 10, which is the largest actually. Let's look at the Alibaba, which is the largest online retailer of China. So even for international companies, we have this data. For Alibaba, we have this data. China Commerce and Cloud, different contributions. We can look at a German company, maybe a European company, LVMH, also Louis Vuitton. Let's see. I'm not sure if the data is available actually. Okay, seems like that data is not available, but the geographic data is available. So its data is not always available. Let's look at a Japanese company, maybe Japan, Toyota. Toyota, because it's traded in US, so I think it's available. I'm not sure what Japanese companies I will look at. Japan, Mitsubishi. Okay, let's see. Mitsubishi. Okay, it's mostly traded in Japan. And okay, I got the wrong one. Mitsubishi Electric, Mitsubishi. Motors. Okay. It's not available. So as the data is not always available, okay, and look at Canon, CEG. If it's traded in US, it's more likely it's available, yeah. But when it's not, but let's look at a Chinese company, and like that's a that's a Chinese company. Now the segment, the geographic data is available, but the segments may not be available. Tencent is the largest internet company in China. Yeah, it's not available, but it's actually available here. So we will look into that, and of course, when we're still working on this, and we will definitely make it good, make it useful for as much as possible. DR Horton, okay, DR Horton. DHI, okay, DR Horton. Yeah, it should be available. DR Horton, home building, elimination, others, financial service, 4-star is mostly home building, of course, rental, and okay, it's making that much money with a margin of 17.5%, which is not bad. Okay. Okay, Don, our lead developer, he's saying that foreign company segment data is available, but there are some display issue here where we'll be working on. Okay, but I think this is very interesting, and I hope you will like it too. And now I want to go back because it's on my screen, so I want okay, let me actually remove it. You can customize this page, right? After I remove it, this will be similar to what you see on your summary page, and so this is what you will normally see in your summary page, because we are still working on that. This page is fully customizable, as you may know or may not know. You can move it to different locations. You can remove different components. You can add components by clicking here. And now let's go back to the valuation I was talking about. In the case of Microsoft, I was talking about Microsoft discount cash flow DCF model. You can see that for the price model, earning per share model, the DCF Microsoft seems to be slightly undervalued, but we provide this GF value chart, which I think it's a better valuation tool. In this case, Microsoft is modestly undervalued. And yeah, any questions? If you let me know any questions, I will certainly answer any questions you have, and also suggestions. I would love to hear any suggestions you have. Yeah, but as you can see that we are always trying to add new contents to the page, and we are always trying to improve the contents we have also. Now I want to go to another feature we released not very long ago, which is the industry overview page. It's called Global Industry Overview. It's under Market Manual, Market, and it's this one, the number 4 column, the fourth column here, Global Industry Overview. It tells you, give you an overview picture of different market, how they have been doing. And then you can dig into the different industries. For instance, if you come here, first it shows you the largest market. The first one, of course, US. Today, and the different time period, 1 week, 1 month, 3 months, year to date, until 10 years. Of course, over 10 years, US market has been doing very well, although it's not very good this year. But last 10 years, can see that the market has been doing really good. The industrials gained 88.4% a year. The technology gained more than 9% a year. Utility gained 9.57% a year. And this year, we know that, of course, energy was the best performing sector, especially the large energy companies, mega cap energy companies like ExxonMobil, all those, and energy companies. The median gain is 36.39%. Healthcare was worst performing sector this year. It's down 53%. Wow, it's down more than half. But if you click on in here, actually, if you click on in healthcare, now I'm in healthcare, US market healthcare. Actually, although still year to date, I could go to year to date. Although that we know that healthcare did poorly overall, it's down 53% median. Sector median, but some are down much more. Some biotech's down 56% on median loss, and medical diagnostic research down close almost 60%. And but some medical distribution companies, the healthcare plan actually gained this year. And some large pharmaceuticals actually, if we dig into drug manufacturers, the drug companies actually can see that the large drug companies actually gain, like Pfizer, AbbVie, Merck. They actually gained this year. If I click on still year to date, Merck has the largest gain. Merck had 45% of gain. Okay, Julia, you're asking about XLE. I will get back to that. And let's finish the industry overview first. And now let's look at the overview. So you can see that from here you can get a very good idea on which sector is doing well this year, and then you can see that which sector has the lowest valuation. I can see here by Shiller P. Actually, I would suggest you to use Shiller P in this case. So which sector is the cheapest? Consumer cyclical, home building, which is cheap. Energy, actually sensitive energy, other energy source, still cheap. Steel, these are cheap. But these are all cyclical companies. You want to look at those to make sure that they are really cheap. So, and the defensive ones, less sensitive to the economy, defensive cigarette companies, tobacco products still relatively cheap. Among the healthcare, biotechnology cheap because it's done so much. The expensive ones, waste management, among defensive, alcoholic, okay, besides that, alcoholic companies, beverage is still is expensive. And I personally also like to look at the dividend yield. And dividend yield sometimes give you actually a very good picture on the valuation. If you look at the dividend, I believe we have dividend here. Dividend. I believe we have dividend here, but let me search it. Dividend. Dividend. We should have dividend yield here. It usually give you a better picture. Yeah, it's here, dividend yield. And if we sort by dividend, we see which industry, which company, which industry give you a higher dividend. Okay, SIG financial service give you a pretty good dividend, and tobacco product, pretty good dividend rates, about 5% of dividend. Real estate financial service, it's good dividend. And this actually give you, I think that it give you a better picture a lot of times about valuation. And from here, can look at the sector performance and look at, yeah, these are different sector ETF, their performance. And now if you're interested into different industries, can click on that. You can see that tells you the within the sector different industry performance, and then their own valuation for this sector, different industries in this within this sector, and their performance, and their historical valuation and historical P ratio, for instance, distribution P ratio, Shiller PE also, and it gives you a better picture of the industry if it's really cheap, undervalued, overvalued, in this case. So this page, the purpose is to give you a overview of different industries, and you can go to different companies. You can, if you click on here, it goes to different companies. I was look at industry here, look at the performance here, different, and each one of this is clickable. Industry weighting here, each one of this is clickable. So it gives you a better picture of the different industry, different companies. Actually, you can drill down. You can drill down. Yeah, WK is asking dividend yield calculation. It's on current price. Yes, it's updated daily. It's on the current price. Yeah, and so basically here, I was talking, when you look at the valuation, you can find which industry is cheap. Once you found it, you can actually, you're for instance, you're interested in healthcare, and then you want to drill down. We have a link here to the screener. If you click on that to the screener here, and it's already selected the healthcare sector you are interested, and you can look at all the companies. Then you can add other filters to it. You want, for instance, ROE at least 15%. You can add to it. Then you can do screening to more. You can screening ROC at least 20%, for instance. Yeah, and you can drill down, can find the companies you're interested. You can do back testing. Just do back testing here. Click on that. And sort by ranked by what? Ranked by ROE, for instance, and from large to small. And if every 6 months rebalance, if I just do that, it will start to do back testing for me. And it starts to back testing for me to see if your strategy works. And look at the performance chart. The healthcare actually did mostly pretty well until this year. Yeah, Julia, thank you very much for the comment. Fidelity is a broker. It's a brokerage company. They are mostly for trading, but we are a research company, so we try to do the research best. We are a research company. Okay, now let me go back to your question about XLE. As we know that we provide that XLE, your comment was that energy went up, but XLE did poorly. Let's see. If I remove this QQQ here, XLE, if you look at actually this year, XLE actually not bad at all. This year, XLE is up 58%. So I wasn't sure why you're commenting that. You said energy is high, XLE is tanking. Probably you're talking about shorter term. Shorter term, yeah. If you look at the last 5 days, yeah, it's tanking. It's tanking 5%. Yeah, but I usually look at much longer term, at least a year or more. It's not tanking at all. It went up 58%. And we can look at its holding. It's holding. It's here. I believe that it's mostly ExxonMobil and Chevron, those kind of companies. Yeah, ExxonMobil is the largest holding, which is 23%. Chevron's is almost 20% almost, and other companies are less than 5%. So of course, because ExxonMobil and Chevron went up 58%, of course, XLE, okay, ExxonMobil and Chevron all did very well. And of course, XLE does well too. If I add here, and if I remove the SPY and QQQ, just compare XLE and ExxonMobil. Look, you can see actually they match. ExxonMobil and XLE matched very well. But congratulations to you on holding this XLE. I'm not sure when you bought it. If you bought it 2 years ago, less than 2 years ago, actually more than 2 years. If about 2 years ago during the bottom of the energy, and congratulations, it's up more than 70, actually up a lot. It's up a lot. Congratulations on that, more than doubled. But XLE actually almost goes in the same trend as ExxonMobil if you look at these two charts. Okay, any other questions? We don't have lots of time now. And any other questions? And I will be happy to answer your questions. If not, I would go a little bit more about the new contents we're adding. Here in the stock summary page, this is what you normally see. And we are actually adding components here. So you can add the sector structure, which is cost, it's a chart there, and the sector weighting. You can see that when I add the page, it does change. Okay, if I'm adding actually, and when I add the chart, it does change. So if you can see that, you can see that the breakdowns. Okay. See that when I add, the page changes already at the back. So then you can see that these are added here already. If you look at ExxonMobil, can look at ExxonMobil, it's here, the downstream, and upstream is here. Oh, it's mostly from downstream, upstream, and chemical, corporate financing. Okay, downstream is a portion that the gas stations, those, and also the gas, what's that called? The gas, the upstream is digging the portion that digs gas, and the downstream is the portion that you change, dig the oil actually. You change oil to gasolines and other chemical products. So that's a downstream. Downstream is mostly is a revenue, the major revenue contribution to ExxonMobil. And okay, historical revenue segment. Yeah, that's the portion we are working on. and we'll release this again in 1 to 2 weeks. Okay, in my opinion, what's my thoughts? What's the best performing screener? Eric, I wish I could answer you, but because when you define best, you need to talk about which time span. If you talk about long term, you talk about short term, no investment strategy, no screener will work all the time for sure. No one screener will work all the time. But if you look at longer term, some screeners, I know that over longer term, the higher quality companies will do better. The company that can grow their revenue and the earnings over long-term period will always do better. But short-term, not necessarily. But there's no one strategy that will work all the time. Our GuruFocus model portfolios will show you actually that some of that, the personal favorite, most broadly held portfolio, over the last 16 years, it's this one, it outperformed 13 years. But in 3 years, in the last 3 of the 16 years, it still underperformed. This year, it underperformed. It underperformed about 6% this year, actually, so which is quite a lot. No strategy work all the time, but if you want to invest in high quality companies, I will suggest you to look at our GF score. The GF score is, for instance, I'm not sure if you notice that we have a GF score. GF score, if you come to the summary page of each company, every company, you can see that on the very top, there we have a GF score. In case of Microsoft, it's 97. If you want to learn more about GF score, click on this question mark. It tells you in detail how the score is calculated and which factor is used and how the historically it has been working. And also we have model portfolios which tracking the performance of different GF score companies. This is a relatively new model portfolio, and you can see the top ones, the second best ones, the third best ones. The difference is not that big, but the lower ones certainly do poorly. The lower GF score companies did poorly, that's for sure. The highest one in short term will not necessarily do better than the next tier, but long term it should. Okay, asking Yanish, what's the thoughts on 10-3 yield inversion? I think we have this Treasury yield chart. If you're not sure, if you're not aware, we have this yield curve data. Okay, if you come to our yield curve page, it shows you the current yield, 10-year, 1-year spread, and it's inverted, of course, and 10-year, 2-year is also inverted, and 10-year, 3-year, yeah, it's inverted as well. And historically, when it's inverted, there will always be an inversion. There will always be a recession, and I believe there will be one again. I believe, but it doesn't mean that stock will go down, or doesn't mean that, but we most likely will see a recession. Okay, asking about model portfolio, each position, we always use equal weight initially, but then when over time the percentage of course changes due to the performance of each stocks. And then when we do rebalance, we don't we don't do anything to the ones that stays. So the weighting is different, but we start with equal weighting. Okay, Rick is asking if he thinks that he remember that at one time the inversion of the yield curve did not lead to recession. I don't think so. At least from what we have here, the chart from 1970s, and every one of the inversion is followed by a recession. If you look at here. Once below this red line, it's inverted. You can see the 1980s, 1990s, this one 2000, 2007, and then even 2020, which is a pandemic recession, short and quick recovery, and current. I think every one of them was followed by a recession. So that's what I have for today. Okay, how do we position a recession? You should always invest in high quality companies. Invest in high quality and reasonably valued companies, because high quality companies can sustain the recession. If a company has too much debt and losing money, it may not survive the recession. Thank you very much. Thank you. And I'm very glad to see you and hope to see you again next time. We are always developing new features, and we always welcome to your suggestions. We'll take your suggestions seriously. Sometimes we may not be able to respond quickly, but we do check every ticket, think about them. And I personally check most of tickets as actually. Thank you all. I'm very glad to see you. Hope to see you again. Yeah, as always, I will speak here on the first Wednesday at 1 p.m. Always first Wednesday of each month and 1 p.m. Central Time. Always the same time and same time. And see you all again. Hope to see you all again. Thank you very much.